Hello again, this is Alex with MasterChartsTrading.com. This is market recap for Friday, January 1st, 2021. 2020 has finally come to an end. Now we're expecting something different from 2021, so I'm really hoping it will be better than 2020. Happy New Year. 2020 ends with lots of pain for humanity, but the stock market doesn't care. It's just going higher and higher. We'll look at small caps that are outperforming currently. Treasuries look ominous, as I think the breakout for 30-year yield is coming up. This would weigh on bonds of all sorts. And we'll review a few of the just completely killer trades from 2020. Nike, Freeport-McMoran, and NEO. Dollar made another low, but gold barely moved, so I'm still having concerns about gold. And Bitcoin again keeps pushing higher with subscribers up over 230%. This is a big number. So first of all, I live here in California, and 2020 has been just a really painful year all around. But somehow people are still just not getting it. Somehow I'm still hearing, that this COVID thing is fake, that all of this stuff is made up, all of this is a conspiracy theory. I used to work at a hospital, so I know all about this stuff. So we're seeing here in California just overwhelming COVID death rates, and this is not even that overwhelming because I think right now the death rate is about 1%, but once the hospitals, which are actually already at capacity, begin to no longer accept patients, this could significantly go higher. So we can see a death rate of 2, 3, 4% or even higher. So again, this is not fake. You need to really pay attention and protect yourself. This is just not the time to deny this stuff. All right, so this is a public service announcement. Let's go back to our stock market. So as always, I use my proprietary price action indicators. On this chart, you can see them as green, blue, red, and yellow line. I pretty much use them exclusively to trade. I use nothing else. In fact, I don't even use volume. You can see there's no volume on this chart. Last year, I made over 100% in my demonstration account. And my clients are saying pretty much the same thing. They're making just enormous amounts of money. So why do we make so much money without paying attention to anything? Because there is a good mathematical formula that is hidden inside these indicators. Even though they look, just lines on a chart, they are actually extremely powerful. On this chart, we're looking back, about a year worth of data. You can see that we exited the previous positions in S&P 500 back in February of 2020 of last year, without knowing anything about any kind of insider trading. So we exited 4 days after the collapse began. And we just waited out this big collapse from March into April. Then in April, when the conditions became correct, and again I only use this my indicators, so I am seeing the same thing you will be seeing once you have these indicators on your chart, and I can share them with you on TradingView.com. So if you need information on how to do it, ask me. But this is what we did, on breakout back in April here. And how do I know it's a breakout? It's simply a close above the support resistance line. I don't have a name for my lines. They're just called green, blue, red, and yellow lines. And so the blue line acts as a powerful support resistance line, especially for stocks, especially for the longer term kind of holds. So that's what we did. We just started buying it back here, and we held it. We did nothing. We're basically now we're at all-time record highs yet again. Here's the latest close at all-time record highs. So you can do the same thing without really knowing anything about how the stock market works. And in fact, I would highly discourage people from worrying too much about how things work. Instead, just make money. So this is to make money. You need to have a system. You need to have a risk control, and you need to have certain psychology. You need to have a certain mindset. I teach all of this stuff at my website, MasterCharts Trading. So you can learn this. It took me many years to learn this because I was doing it through trial and error. But if you just listen to me, and you can learn it in 5 minutes and start making lots of money. Many people, other traders, they use some weird indicators. Especially they like to use volume, and people just love volume for some reason. And I can tell you, volume is completely useless. Totally. Like, I never use it. You don't need volume because there is no point. Unless you are, moving billions of dollars in stocks. But for normal people, if you have an account less than $1 million, you just don't need to worry about the volume at all, because you can easily buy the number of shares you're planning on buying. But some people say, but isn't it true that the breakout, like for example, with what we had here in April, shouldn't be on large volume? Maybe. Some people like volume, but like I said, it's useless. No need for it whatsoever. So if you have my indicators, you're basically set. You can have just great returns. QQQ, the Nasdaq, same basic principle. This arrow is purple because it broke out before S&P 500. So usually what I do is I wait for S&P 500 to break out, and then I start just buying them, various stocks. But QQQ broke out slightly earlier, so this was more for like adventurous people. So if you were more adventurous, you got in here. And that's 46% gain on Nasdaq. That's an average. So it means that quite a bit of companies really gained significantly more than 46%. So again, at all-time record highs, news be damned, basically. And it seems like it's set to continue. We don't know. Obviously, we can see a pullback, but it also could be like the Nasdaq bubble of 2000. I think it was in 2000 when it just went up like crazy high, and everybody is predicting that it will burst, but nobody really knew when it will burst. So that's my point, is that the same thing is that we know it's going up. One day it will stop going up, but we don't know when that day will come. It could be next year, or it could be in 10 years. So trade the chart in front of you, basically. Don't worry about the future too much. Small caps, IWM, you can see up arrows here, actual alerts. Lately they've been on a tear. This latest trade was just crazy. Look at this. From 24th of September, it just took off, 38% gain. How did I know it was gonna bottom there? I didn't, but this, my lines, they look for support and resistance, and I'm not the only one who's seeing these levels. So robots and other traders, like for example big traders, they also see the same levels. It's just, I'm highlighting these levels for you, so they're easy to see and easy to act upon. But back here in August, for example, I had no idea where this is gonna go. So it did pull back, touched this support resistance line, it closed above it, and that was my signal. I knew nothing else really. I don't really need to know anything. Like, was there a good volume here? Well, we can find out. Let's see if there was a good volume here. I don't know. It was just normal volume. Nothing abnormal about this volume. So to reiterate, volume is quite useless. Like, for example, here on the 9th of November, volume was really high and we made a new high for the move. But then afterwards, we just continued higher. Does that mean that, if we were back here on 9th of November and we're, trying to figure out, shouldn't this volume mean that we're going to be pulling back because this is a red candle and this is now a red volume on the downside? Some people would say yeah, so they would cut their win basically by closing the position, and notice what happened afterwards. It continued higher. So again, really no need for volume. Highly discourage it. It just confuses people basically. Looking at Treasury Bonds, so this is a 20+ year Treasury Bond ETF, TLT. I have a position, I opened it back on September 10th. It's not really doing anything that I wanted to do. I wanted it to go higher immediately, it didn't. Now we're like in between, basically, in between bullish and bearish levels. Bearish levels are at 152 currently. If it breaks below that level, I will close my position and may actually open a short in Treasuries. Maybe I'll buy puts on Treasuries. The reason being, as I keep showing this chart, this is TYX. So TYX is Treasury Bond Yield versus TLT, Treasury Bond ETF. So they move opposite to one another. Here we can see that Treasury Bond Yield is approaching bullish levels. What does that mean? That means, if we go back here, you can see that yield just kept dropping and dropping and dropping. What I'm trying to say is that if it breaks out, there's a good chance that the yield will continue to make higher highs and higher lows. By extension, TLT, the Treasury bonds, would make lower lows and lower highs. So again, they move opposite to one another. So additionally, we can see into the future. I'm projecting now my indicators into the future. Here's January 20 inauguration date. You can see how close the price action is currently, this 31st of December, how close it is to the breakout level. So this is very dangerous territory for Treasury bond yield, because once it breaks out, people will do what I just described. They would start shorting Treasuries. They would start selling Treasuries. If you don't have an opportunity to sell Treasuries, sell Treasury bonds, then you can, I meant to say to short Treasury bonds, then in your retirement portfolios, for example, you will be able to just simply close the position and exit Treasury bonds. So this is not great for the government, because if the Treasury bond yield continues higher, it will increase the borrowing cost. This is also not very good for utilities and for real estate, because these two sectors depend on very cheap yields to finance their operations. Like, for example, utilities and real estate, they just need they need to borrow a lot of money, basically. So this is concerning, and I'm looking at it very carefully, and it does appear like we're going to be breaking out. The yield will be breaking out. It sure looks that way. So again, if that happens, by then most likely TLT would be already closing below this red support resistance line, and I would short it. So this Treasury bonds versus Treasury bond yield. So let's see what happens in the next couple of weeks or so, especially very critical next couple of weeks for the yield and for the country for that matter. So was just looking back over some of the trades. Some of them I did myself. Some of them they were just alerts to my subscribers. So this is Nike. Nike, well, famous brand. Here are the alerts back on 29th of April and another one on 13th of May. Straightforward, back in May, how did I know it's gonna go that much higher? I didn't. What I did know is that we're breaking out above support resistance, and so the chances of it continuing higher have increased significantly. So that's why I sent those alerts here in April and May, and notice that I was absolutely correct. It was a huge move for Nike. 64% move, and for large companies like this, such large moves are not that common, but they do happen. And just the way it moved really is very nice. You can see that just kind of touched the green line a few times and continued higher. Now we're at all-time record highs. I mean, again, we can pull back, but depending on, hopefully you entered back here in May, then yes, you can totally keep riding it upwards. And I would be most likely I would still have it open. I normally trail at the blue line itself, and I take profits around the green line. So I've probably taken some profits here on 30th of October, but kept the remainder of the position. Another one, Freeport-McMoran. This one I actually traded, so I bought calls here. I don't have it marked, but I bought calls here on 15th of June. I did sell them somewhere around 28th, so somewhere around late August. They gained average like 150%, something of that nature. So very sizable gain, even though the stock moved, like 30%, 40%. So usually it triples when you buy options. But as I keep saying, the longer you hold the stock, the bigger the gains usually. So there is even a saying on Wall Street, traders that are able to be right and sit tight are quite rare. So I'm right. I sometimes cannot sit tight. That's my psychology of trading sort of mistake. So looking forward, going forward, I will do my best to just do nothing. And I keep saying the same thing: do nothing, do nothing, do nothing. But I keep doing things. Like for example, I keep taking profits. It's been working, but I think it could work even better. So I'm improving my system incrementally, but it works already as it is. So yeah, Freeport-McMoran. So breakout back in June, clear breakout. You don't need to be a rocket scientist to see this. So look, before here, there was a price was below the blue line, and the next day on the 5th of June, price is above the blue line. So we buy it here, put our stop at the yellow line, set our target, not that far off, but you can set it at the green line. It's a little bit of ambitious target. I usually give 2 average, so ATR, average true range. So ATR is a free indicator, and you can find it right there. It's average true range. You can also there, average true range. So it's a free indicator. It just shows you how much does the stock move. So back here in June, the stock moved about 50 cents. I'm reading it off of right there. So what is it, 53 cents. And then the target I usually set as 2 average true ranges. So if it was 53 cents, so then there's your target right there, about $1 or something. And usually this is what I do. I sell partial here. I definitely advance my stop because my stop was back at the yellow line. So I would move my stop to entry at that point once my target is reached. And then it just keeps going. It just keeps going. I mean, sometimes it doesn't keep going, but on occasion it does keep going. So if you have options, if you bought options back in June, you see how it makes sense to buy options that are quite far out because you can hold them for longer. Alternative scenarios, you can buy multiple options. So like, for example, you buy 6 months options, 12 months options, 24 months options, and just sell the closest expiring ones as your targets are reached. And yeah, so another option is to buy the actual security. So yeah, that's another possibility. But with options, your downside is protected. And also it's limited, and also the upside is unlimited because stocks can go up 100%, 200%, 300%, but options, my god, they just sometimes go hundreds of percent. And here's one of those examples, NEO, N-I-O. How did I know anything about NEO? I know nothing about NEO back in May here, or June rather. You see, back on June 26th of May right there, I looked at this chart and I'm like, that's kind of cool. Looks like the stock was below the blue line, and here on the 27th of May it started to be above the blue line. So I bought it myself here, and I didn't know anything about this company. I think they're a car company. So it just went in my favor. I bought several options here, and my trade lasted like this much. So I sold most of my options like around before July. But notice that if you didn't sell them, you just sat in your position, that's a 1300% gain. And technically I would have still been opened. My position would still be open because I would have been trailing at the blue line. And notice that the blue line has not been touched. So yeah, that's how much sometimes the gains are. And if you got in, especially if you had options, let's say you bought in May here, you bought, I don't know, options expiring sometime in 2021, like maybe late 2021 or even 2022, if they were available. Oh my god, I mean, can you imagine 1300% gain? And options usually do triple, so we're looking at like 3,000 to 4,000% gain. That's just like one trade and you're set, basically. Yeah, so some of my subscribers were able to open, got in on NEO. Congratulations to them. And yeah, let's hope we're gonna get something like this in 2021 as well. Okay, so switching gears, now looking at DXY, dollar currency index. Here is a breakdown that occurred back in June, and downward facing arrows, meaning that if I was trading it, or if this was a tradable security in the United States, then I would have shorted it. Notice that it just keeps going lower and lower. Dollar is super weak. I keep thinking that we're gonna start bouncing, we just keep not bouncing. So we keep making new lower lows and lower highs. This is a definition of a downtrend. Now, I also trade gold. I trade gold and silver. So with gold, you can kind of see that, this is dollar index. It's been going down since June. And gold, if we look at June, you see like right there. So it did go up, but then it's been sliding basically downwards, or trading sideways. And what worries me is that, especially like here since 2nd of November, you can see it's been just sliding and sliding and sliding downwards. But gold really didn't do much; it just traded sideways. So this is what worries me about precious metals, is that even though gold, even though the dollar is super weak, gold is not really doing that well. So I kept saying the same thing. If the dollar strengthens a little bit, I think gold will come under pressure. Let's see if it actually happens. If it doesn't, then I'll be wrong. But like I keep saying, there's so many opportunities, there's so many trades out there that if you miss one trade, it's not a big deal. So if I miss this gold trade, not a big deal to me. Same goes with silver. Silver is a little stronger. So if you bought it, for example, back here in November, 1st of November, this is enough to make money. So right now, what I'm seeing is a possibility of resistance at around 2680. So notice that silver is trying to get above it, and it's just not having a strong enough time to do that. So let's look back. Let's keep looking at dollar index. Let's see if it gets anywhere. And if it does start to bounce, I think we can see a strong move down for precious metals. So let's have an open mind. Finally, Bitcoin. So Bitcoin was just, I don't know, it just went to the moon. This is our all-time highest. Each Bitcoin is close to $30,000. Here on this chart, I wanted to show you that we did trade it, and there are the alerts back in April. So we were looking at, the alerts were at like 8,600, and now it's at 29,000. So notice how well this setup, how well my indicators work for pretty much any security if you know what you're doing. So if I bought it back here, I did buy it back here, I got stopped out unfortunately, but I would have just trailed at the blue line, trail. So take some profits maybe, but again, we don't know. This could be like a blow off top, or it could just keep going, or it could collapse. We need to be open to many possibilities. The important thing is you need to know what you have. So let's say you bought it back in May, then you have so much profit, 237% profit, that you are in no danger of having your trade turn from winner to a loser. So yeah, sometimes the runs of this magnitude happen as well. So again, congratulations to the subscribers. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com. You can also go to everyonecantrade.com. I have updated some of the services here. So now I have 3 different levels of service. I have the trading indicators, which are these lines on the chart. The green, blue, red, and yellow line that you can have on your chart as well. It's really easy. Don't be afraid. All you need to do is to have a free TradingView account, and I will open the door for you once you sign up. So this trading indicators is actually a very powerful package already, because you have not only the indicators that I just showed you, but you also have the scanner. So the scanner will find stocks like this, for example, like NEO. It will find you stocks that are closing above the blue line, and then you can act. So you can buy on close above the blue line, and that's like a full package basically. Right now I'm offering free 7-day trial, but what's really cool is I'm offering 90-day money back guarantee. some conditions do apply, and here are the conditions. The condition is you will make some money. I don't know how much you will make because you will have a different account than I do. You'll have different psychology. Hopefully you will follow my exact system. So this is, my conditions for you is that you need to do what I'm telling you to do. You need to follow the system. I will explain the system. It's super easy. So you need to follow the system. You need to use risk control. How many shares are you buying? Are you buying too little or are you buying too much for your account size? Again, this is very easy to do. You just need to know what you're doing, basically, and I can explain it. And you need to make at least 7 to 10 trades during the 90-day money-back guarantee period. So, this is just to prevent people from, buying my membership and then not trading and saying, well, it didn't work, but you didn't even trade. So I will require from, people who sign up, if they want to claim their 90-day money-back guarantee, if they want to have a refund, I will require this information from them. And you need to make, if you follow my system, you're guaranteed to make a profit. I can deal with that much. And that's why I'm offering you 90-day money-back guarantee on the amount that you pay. Now, the second is Ultimate Bundle. So this one actually includes all of the things that I just described, the indicators, the stock screener, and also it includes 2 of my newsletters. So the newsletters contain alerts on common stocks, common ETFs, commodities, gold, cryptocurrencies, and now a new speculator blog, which is which looks for stocks like NEO, for example, really strong breakout potentials that quite often work out in our favor. And then finally, VIP access if you need private coaching. So that's basically Ultimate Bundle plus my private coaching. You get a 30-minute private session every 90 days. You can buy more if you like, but for a separate price. And additionally, you can get my support over Telegram or over the text as well. So I think it's a very reasonable setup. You can make money already with trading indicators only. It's only $50 a month, but I think the Ultimate Bundle is much better deal because you also, in addition to the tools like the indicators, you also get the many examples that I send out. And of course, if you need private access, so some people just don't really like to learn or having a hard time learn from videos, etc., and they really need like a personal attention, and I can provide that. So consider signing up. That's it for this week's recap. Again, if you have any questions, please let me know. Thanks for watching and have another great trading week. Bye bye.